What's up, guys? Right here. Alright, what's up, guys? Wow, what a beautiful day, right? We're here on the corner of 34th Street and 11th Avenue, overlooking the beautiful Jacob Javits Center. You know, the Hudson Yards is freaking amazing today because they have this amazing setup going on there right now. Give me a sec. They have this amazing setup going on there right now for everybody watching the US Open. I don't think I can go over there just because there's so many people. It's going to be too packed. But wow, does New York City do a great job of making things feel amazing here in the summertime. Anyway, it's good to see all of you. I wanted to pop on here just to quickly talk about the markets and enjoy this beautiful Friday evening with all of you live. What's up, Mike? Good to see you. I see Sally is here, Lee is here as well, Julian, Sebastian, TD, Vidzita Lopez, Julian, Monday is here, NG, Thomas Trivedi, Steph UF, Land of the Mitten, and Kevin. Hey, Dan Sang, what's going on? Dan, I'm gonna be in Flushing later today, actually. I'm really excited about it. There's this spot I've been going to. It's not a Molotang spot, don't worry. I know I always hammer you with the Molotang spots. In any event, it's this skewer's place, and it's right off of Prince Street in Flushing. I'm not too sure if you're familiar with it, but it's pretty good. It's pretty cheap too. You can get literally hundreds of skewers, and you walk out of there paying maybe 90 bucks. Anyway, Happy Day is here. Good to see you. NG. Brandon says, good evening, Tom. Cheers. Andy says, September is the best month in New York City. I think I'm going to have to agree with you. First of all, I apologize for the wind noise. I forgot my microphone because we haven't streamed in, it seems like, maybe a month, 2 months. So just excuse all the wind noise. But yeah, this has been a very, very strong market. And I wanted to quickly pop on here to talk about a few things that I think are very, very important to generally pay attention to, specifically as it relates to AI and this new administration. I'm sure all of you seen Sam Altman, obviously the CEO and founder of OpenAI. He was at the White House yesterday along with Mark Zuckerberg of Meta. Pretty much all of them. Sundar Pichai of Alphabet. Who else? Oh, CEO of AMD was there as well. Pretty much all the main tech CEOs. Yeah, Tim Cook of Apple. And they were all at the White House talking about artificial intelligence and investments into the United States. And I wanted to bring it up just to kind of put things into perspective of solidifying long-term thinking, right? Yes, it's great that the S&P 500 is trading near new record highs. It's great that the Dow Jones Industrial Average is trading at near new record highs. Same thing for the NASDAQ. And performance in the equity market has been stellar, right? Particularly yesterday, or 2 days ago now, we had that ruling in favor of Alphabet. If you remember correctly, this was during I think this was all the way back during the first Trump administration, brought about allegations of anti-competitiveness against Alphabet. Many, really well-known economists were thinking that Alphabet might be forced to liquidate or sell or divest, is probably the better word, their Chrome browser, and many other things. As you know, Apple pays Alphabet billions of dollars a year to have their Google Chrome be the default web browser on iOS products like iPhones, iPads, and the like. Long story short, the courts ruled in favor of Alphabet, and that stock took off, blowing into new all-time record highs, up about 8% after hours. Apple caught a pretty big bid as well. And I think this is just green lights go for that company. We gapped up about 8%, but then we rallied on Thursday and we closed at the dead high of the day on Friday. This tells me that what was holding Alphabet stock down was 100% this limbo that we were in terms of the litigation, and now that's long gone. I think all the institutions that wanted a full allocation towards Alphabet, they got it. But thinking long-term, big macro picture here, I would estimate we're probably in possibly top of the third inning as it relates to the duration of this new bull market. So that means, of course, you're going to get corrections. You're going to get market drawdowns, like the one we saw. You could pretty much call that a crash, I guess, tariff crash. The Trump tariff crash of April 2024. In my view, when you have the market selling off in a very, very rapid succession, similar to like you had in COVID, similar to like you had in 2018, the sharper the retracement in the market, the stronger and the more ferocious the snapback is going to be, in my view. And during this duration of this long bull market, as you build out AI, as you build out data center, there's going to be many, many bumps in the road along the way. In my view, those are unbelievable layup opportunities to get long America's greatest companies. Okay, to put things into further perspective, speaking of Alphabet, we'll stay on that topic because, as you know, they are the most profitable company in the United States. It's not in the world, right? We'll probably back out Saudi Aramco there because nobody really knows how much they make, but they make tons. In any event, Alphabet now makes a net income, right? So not EBITDA. This is net profits after, property after paying everything, of about $100 billion a year, which is what I like to call cartoonish profits. So if you have Alphabet right now making in profit about $100 billion a year, when we're not even in maybe like mid-cycle build out of AI, I mean, how much money do you think they're going to be making in 10 years or 20 years, right? So I would highly encourage anybody this weekend to take the time, sit down, and watch some of those press briefings of that dinner that President Trump held at the White House with all of those tech leaders, such as Tim Cook, Sam Altman, and just kind of put things in perspective. You can keep the politics out of it, because I know a lot of you don't like the president, which is fine. I mean, I could honestly give a shit if you like the president or not, like him, hate him. The bigger picture is the smartest people in the world, the most educated people in the world, the most wealthy people in the entire world, that are literally before our very eyes, changing the course of history, changing our lives. All of them are long-term optimistic. All of them are saying we're going to continuously expand our capital expenditures to build out data centers, to build out AI. If all of these experts are correct, right now there's no guarantees. Artificial intelligence is supposed to streamline operations and expand gross margins across the board, right? I'll have you do a little bit of your own homework over the weekend, but generally speaking, what is the average gross margin of a company in the S&P 500? If AI could just increase gross margins across S&P 500 companies by 2%, 3%, I mean, how much higher do you think this market is going to go over time? Anyway, I just wanted to pop on real quick. Let's say hello to everybody in the chat. And then we'll cover a few other topics, but I see Connie Ruiz is here. Patrice 2020, what's up? Good to see you, Patrice. I see TC says, hey Tom, great to see you live streaming. Thank you. It's good to see everybody. I've been quite busy, so I apologize for the lack of streams, but it's always a good time when we're having a chat, right? Josie is here, welcome. Andreas is, when are you going to be filming another Vespa drive through Miami? So here's the thing, my place is rented out, I think until November. So I may not even be down in Miami early November. We'll see. The demand down there has superseded my expectations, so. I see Dave E is here. What's up, Dave? We have a beautiful shot of the Empire State Building. I see Solo 401. Who else we got in here? TC, NG, Alan, welcome. Christian. So here's another thing that I believe is important to quickly talk about and put a focus on, and that's gold. I wish I could show you a chart of gold, but if you have your Bloomberg terminal up or tradingview.com or MarketSmith, I want you to go to a monthly time frame of gold and just look at that big chart. And if you remember correctly, when we would do these streams regularly, roughly about a year ago, this was before gold broke out over 2,200. This was a decade-long cup and handle. And now we've broken out, we've run 83%, and we're cracking 3,500, I think, right? Right now, what's gold at? What's spot right now, everybody? 3,550, something like that? Anyway, gold is ramping, particularly after, I think it's safe to say that Fed Chair Jerome Powell and the Federal Reserve have kind of caved into the administration's stance, right? Whether you like it or not, the Federal Reserve has been pressured by the administration to cut interest rates. And it looks like that's gonna happen, particularly after what we heard in Jackson Hole. Gold took off like a bat out of hell. Oh wow, Peter, 36.40 an ounce, right? Gold took off and it continued to rally today. It's been up like 3 or 4 weeks in a row. That gold is screaming at us, okay? Gold is sort of flashing those red lights, telling market participants that easy money and accommodative monetary policy is coming down the pike yet again, right? Whether we like it or not, we don't want to politicize it. We go with what the market is telling us. And after that Jackson Hole speech, gold has told us and continues to tell us that we are now going to be transitioning into a very, very accommodative monetary environment at the Federal Reserve. Yes, I know that our national debt is ripping to new all-time record highs seemingly every day, which is a major, major negative. But right now, the market is telling us that, again, not to sound like I'm repeating myself too much, whether we like it or not, we're going to get probably another decade of ZIRP, which stands for zero interest rate policy, very, very accommodative Fed. And not only an accommodative Federal Reserve, which is the US central bank, but very accommodative monetary policy globally, right? If you look at the BOJ, the ECB, all of it, and that it is probably going to continue to propel hard assets like gold much, much higher, and act as a tailwind for equities during this big AI build out, which kind of, brings us full circle to kind of solidify my idea and my thesis that we are still very, very in the early innings of a larger bull market. Okay. Now, of course, you have, if you go back and you could punch this into Perplexity AI or ChatGPT and do your own back testing, the market corrects about 10 to 15%, roughly 6 times every 5 years, right? And with the Fed kind of providing a put under that market, with corporate earnings still being extremely positive, as of now, with the current data we have, those pullbacks in the market should be used as buying opportunities until proven otherwise, right? Which is mainly predominantly driven by corporate earnings. We just got through earnings season, okay? And out of all the companies in the S&P 500, about 85% of those companies beat earnings expectations. And of that 80%, another 50% actually raised forward guidance. Okay, so they, in other words, what they told Wall Street that they were going to perform for the next fiscal year, they've increased those numbers. So focus on the earnings, focus on the liquidity, and I think there's going to continue to be some amazing opportunities. All right, let me catch up on some of the comments. I see Amy Lou here. What's up, Amy? Says recession will be in the next several years, so solid gold and some other valuable things should be good. Sam M is joining us. Good to see you, Sam. Sunflower is joining us. Hey, Sunflower. Welcome to a live stream. Amy says, Tom, if the Federal Reserve will cut rates, the dollar will depreciate again. So only gold should keep its value. Well, assuming you're correct, right, that would also probably put a major tailwind towards equities. If you remember correctly, historically speaking, right, over the last, I'd say 3 to 4 years, we've been actually having to deal with a dollar issue of the dollar being very, very strong. And it sounds good when you're like, the US dollar is so strong, look at the Dixie's ripping. Corporate America doesn't necessarily like that. If you remember, we would constantly talk about Apple's earnings, constantly. Alan, thank you for the donation, appreciate that. And Tim Cook would say, Tim Cook would constantly say, we continue to have currency adjustments eat into our bottom line, right? And that's because if you are a major global company and you are selling your products and services all over the world, but you're an American company, you have to report your earnings in US dollars. So when you go to convert that foreign currency back to US dollars, well, guess what? That foreign currency can now buy less and less US dollars, thus decreasing your overall profitability. So to your point, you know, if the dollar starts to weaken here, that would act as another tailwind to corporate America. Interesting stuff. I see Henry Legend III. So I'm currently overseas in Taiwan, eating a lot and going to visit a semiconductor fab. Ah, very cool. TSMC, we love that. Hey, Mary is here. Says good to see you live. Good to see you as well, Mary. Hey, Emmanuel is here. Good to see you, Emmanuel. Mr. Bagman says happy Friday. Good to see you. Bullish Hood just got added to the S&P 500. Oh, Maron. Oh, guys, this is where all the food cart vendors are stored every night. That's one reason why I'll never eat at those food carts in any event. Wow, well, so that's breaking news. I didn't know that. I knew that AppLovin and Robinhood were up to be added into the S&P today. I mean, so what is this? Did the stock move? Are we up after hours? We probably got a little bit of a bid, but that's one of the stocks that we've been watching and quite bullish on, but I didn't know that. Well, congrats to Vlad and the team. That's pretty good. Hey, Hawaii, what's up? Long time no see. Hopefully you'll be able to make your way back to New York City soon. Always appreciate you being here. And hope you and the family are good. Mary is here. Extreme window tinting says it's nice to see you walking and talking again. Indeed. Mr. Bagman says Robinhood is up 8% after hours. Lovely. That is lovely. Most of you already know my thesis on Robinhood, and we've been long that stock for quite some time. And my thesis goes all the way back to the 70s. Now you might be thinking, why would it go all the way back to the 1970s? This doesn't even make any sense. Robinhood wasn't around. Well, every time I'm modeling a stock or I'm trying to decipher the valuation, yeah, of course you're on the discounted cash flow models. Yeah, of course you do all that stuff. But I like to do a comparative analysis of a company that I think is similar, but later along in their cycle of a company, right? Going from, you know, small cap, mid cap, and large cap. And over the weekend, if you have some time, maybe you could go on Amazon and buy Charles Schwab's book. It's a very good book. It's all about how he built the company in San Francisco and how he disrupted the broker business to really be the first main, very aggressive, retail-focused discount broker dealer that drove commissions to near zero on Wall Street. And one of the greatest position size traders of all time is a guy by the name of William J. O'Neill. And one of his most winningest stocks in his career was Charles Schwab, was buying Charles Schwab, which at the time was a very innovative company. And it's reported he probably made a little under $1 billion on that trade. Nobody can confirm exactly. We'll wait for the FDNY to come by. In any event, to cut to the chase, I believe that Robinhood is our generation's Charles Schwab moment. Okay, they have really pioneered leaning into payment for order flow to get commissions to be zero. They have really, really leaned into the gamification of investing, whether you like it or not. And they've really, really leaned into what Gen Z and millennials want to invest in, which is digital assets and cryptocurrencies. The baby boomer generation is the wealthiest generation in human history. And the boomers are set to pass down their wealth to the millennials and the Gen Zs. And if you don't think for a second that at least some of that wealth isn't going to go into digital assets and cryptocurrencies, I mean, I think you're rather ill-found. And Robinhood right now is the only platform that younger people are investing on. There's whole Discord communities about it. There's whole, YouTube communities about it. Robinhood is the broker-dealer of the future. They're also heavily leaning into tokenization of assets. I wouldn't be surprised within the next 5 to 10 years, you'll be able to sell your real estate, your house on Robinhood, tokenization of everything. That's going to be our Charles Schwab. And it's going to sound like a crazy claim. In the next 20 years, Robinhood could be one of the largest financial institutions in the world. I'll say that again. Especially, within my lifetime, without a doubt, it could be one of the largest financial institutions in the world. Bar none. Now, with that context, of course, right? Like, we're going to try to all be adults and, try to speak with a level of intellect. Of course, there's going to be corrections along the way. There's going to be bear markets along the way. But if you do a post-analysis of Charles Schwab, right? If you go on your Bloomberg terminal, your TradingView, MarketSmith, pull up a monthly chart of Charles Schwab. You could also have ChatGPT and Perplexity AI help you with this. And you could do an entire post-analysis of how many times did Charles Schwab retrace 30%. Or retrace 50%, right? But over the long term, I think that company is a massive, massive winner for those reasons alone. Mondays, says Tom, I just started using the Robinhood Gold Card. Well, that's another thing. Yeah, they're getting into like credit cards and lending, I think. Junior, what's going on? Jen Claus is here. Amy Lou says, hey Tom, we have been living in California for our life. Now we would like to visit and get to know more about the East Coast, so purchase a condo in New York City. Yeah, I think that would be great. New York's a great place. I think you'd really enjoy it. I'm trying to get used to the chat again. Anyway, we're now walking up 8th Avenue. I'm going to try my best to bring back the live streams, potentially maybe 3 days a week, just to kind of have a chat with everybody. Now here's another thing we got to talk about, which I think is very, very undercovered in the media. It's kind of been like glossed over because obviously Bitcoin and cryptocurrency is like the hot topic, and AI is the hot topic of the day. You could call them like the buzzwords. But a fundamental change that's happening on Wall Street right now that is being so overlooked is something the Trump administration just recently did. And I'm not going to say if it's good or bad or not. I don't care. We're talking about it just from a market's perspective, because I know a lot of people get freaked out when we even bring up President Trump's name for whatever reason. But you are now going to have an entire industry where the private markets are going to be open up to the average individual American through their 401k retirement accounts. And that's freaking massive, which I believe is going to be bullish for financial stocks longer term. Goldman Sachs just made an investment into T. Rowe Price, which was, they're a massive custodian of retirement accounts. I think they have over 1.7 trillion or something in assets. And you're going to start to see a lot of these private equity shops, right? Apollo Global, KKR, a lot of the private markets and private credit departments at a lot of these major banks and private equity firms start to package up products to sell to Main Street in their retirement accounts. Now, again, I'm not going to comment whether I think that's good or bad or not. The point is, if you think about fee income at a bank, right? Goldman Sachs made a massive investment in T. Rowe Price for a reason. And that is because they see big dollar signs as it relates to American retirement accounts. And they want access to those retirement accounts to sell them private market products. It will be rather interesting to see over the next few months. I think this will really start to roll out. Give it like 6 months to a year, but you're going to start to see television advertisements. You're going to start to see YouTube advertisements from companies like T. Rowe Price, from Apollo Global, buy our private equity index, get exposure to private equity through us. And that's going to be a monster industry for those banks. So let's keep an eye on that. And let's see if this really catches traction, because that's just going to be another revenue driver for these big financial institutions that already have a significant amount of tailwind already. We're going to start to have a lot of the IPO activity pick up on Wall Street, assuming we have interest rates come down. If we get a rate cut at the next FOMC meeting, we're going to have more M&A activity pick up because money is going to be less expensive. So let's just watch that. Keep an eye on it. I think that was a very, very big piece of news that wasn't very well reported. Goldman Sachs taking a sizable stake in T. Rowe Price. Hey, Tatted T, what's going on? Welcome. Thank you for joining us. Hopefully you're doing well. You guys will be able to experience a New York City rush hour. Patrick D, what's going on? Andrew Lee, what's up? Man, the city is just too loud today. It's crazy. So much noise pollution. Hey, Jeff from Southern Tier, New York. What's going on, Jeff? Dell 477s. It's amazing that I'm here in the UK watching full HD live of Manhattan. Well, thank you so much for being here. We're right outside of the New York Times building. And we are actually going to walk over to Bryant Park. So what do you guys think overall? I mean, what is your take on the markets long term? Do you guys share that same sentiment as I do? That generally speaking, we are living through one of the best times to be alive ever. Oh, we do have to talk about that non-farm payroll number that we got out. And I'll give you a few of my takes on the jobs number. We did have the unemployment rate pick up a little bit. And I have an interesting theory that a lot of people are going to disagree with. You could call it contrarian in nature, but all of the data that we're seeing points to my thesis. So we'll talk about that in a minute. But I'm sure everybody is seeing the poor jobs numbers, right? It's not just me. We got it out today. You're also seeing a record number of revisions for net new jobs are being revised lower. The June jobs report got revised lower, so we actually had negative jobs added in the economy for the month of June. A specific point of context, though, is you're seeing a hemorrhaging of jobs, specifically in the federal government, right? Which we knew, we were expecting that already. You know, this administration to come in there and just tear it up. You know, move fast and break things, lay people off, you know, piss a lot of people off too, whether you like it or not. But it is in my view that you're going to continue to see hiring slow down. You'll probably continue to see layoffs increase. And you'll also see the unemployment rate over the long term probably rise. And that's going to be extremely bullish for the market and extremely bullish for the economy. Crazy. Now, everybody's saying you're delusional. That doesn't make any sense. And I'll explain my position. And I was talking about this with a good friend of mine today. And this comes from studying what all of the
It's gonna be like that.
The experts in AI and what all of the innovators are saying. Okay? You can now run an operation extremely lean and mean with AI. If you have not listened to the most recent podcast with Sam Altman, I forget what her name was, but she's a very good interviewer. And she did this maybe like an hour and a half interview with Sam Altman talking about artificial intelligence. What do you see coming down the pike? Do you believe all of this pessimism about, you know, mass layoffs and nobody's going to have a job and the economy is going to crash? The way all of the people who are building this new world, the way they're seeing it, and I actually agree with this, is artificial intelligence is making us more efficient. If you do a post-analysis and you go back throughout history and you study any major technological advancement, from Henry Ford and the assembly line all the way back to electricity and the light bulb to the build out of the internet, it's always made humans more productive and more profitable. Every time. It's always increased productivity, streamlined operations, and exploded profits. And AI is no different. So you're now able to run a multi-billion-dollar company with a very lean and mean team, with a handful of people. Over this next decade, you are going to see multi-billion-dollar companies run by 5 employees. You are going to see multi-million-dollar companies run by 1 person, just because AI will be able to do so much for you. So we might be seeing a shift towards the old narrative of, you know, you graduate school, you go work at a big company, you get the pension, and then you retire, to you graduate college in a specific hyper-focused skill. I think also high school is going to be completely transformed and changed. You already have some startups working on that, which is a topic for another live stream, but Bill Ackman and some other big investors are investing into these AI schools that are only 2 hours a day. So instead of wasting 7 hours a day at school, you know, throwing fucking ketchup across the lunchroom, artificial intelligence makes very, very specific and dedicated lesson plans for each individual student based upon their personality, based upon their learning disability, everything. And they could bang out all the work in 2 hours. Anyway, that's besides the point. But I think you're gonna see a long-term shift and a major, major change in the labor market where companies won't need all of these employees, while at the same time you have revenues increasing and profit margins exploding. You'll see more companies created, but at those companies, it might be 5 or 10 people. It might be 15 people. However, this isn't all sunshine and rainbows. There will be a period where you will have people who are struggling. You will have people who are suffering, just like any other major technological advancement. I mean, how many jobs did the assembly line kill? Right? How many jobs did the internet kill? But then, how many jobs did those technologies create over time? The problem is AI is building out at such breakneck speed. The adoption curve of artificial intelligence and AI is just so rapid that we just don't have as much time to adjust as we've had during the build out of, the assembly line, mass production, right? The build out of the internet. This is happening at 3x the speed. So long term, this is going to be the best thing that's ever happened to the world. But short term, I think in the labor market, you're going to endure a period of volatility, the likes we probably haven't seen in decades or even generations. So don't be surprised, right? If over the next year, you remember this stream and you start to see headlines, more horrible non-farm payroll numbers, right? Unemployment rate rises again. But you'll also simultaneously see headlines such as S&P 500 new all-time record highs. Corporate America has never made more money in the history of corporate America. Those two things might be true at the same time, and that may break people's heads. Again, over the long term, this may be like a 10-year thing where you have the unemployment rate in the United States increasing. You have overall job growth being lethargic, while at the same time you have corporate profits ballooning. So let's keep our eyes on that. Anybody have a take? Anybody think that take is bullshit? Anybody think that take is a good take? What do you think? I'm open to anything, but that's just kind of how I'm seeing things. If you would like additional context on that, you really just, in your spare time, you should be doing nothing but studying Sam Altman, studying Sundar Pichai, studying Zuckerberg, studying NVIDIA's Jensen, everybody who's building out AI and data center, Novogratz. You should just be plowing all of your time and energy into studying them. What are they saying? Where are they saying to invest? Because that is where things are going. Like 100% that is where things are going. I think the waiting game of, is AI and data center gonna catch on? We already have our answer. Yesterday, as we mentioned before in the live stream, you quite literally had the most powerful man in the world, the President of the United States, at a massive roundtable with all of the big tech executives. Zuckerberg, CEO of Alphabet, CEO of OpenAI, Sam Altman. Every single one of those people were saying, we're going to spend $600 billion building out this data center. Oh yeah, we're going to spend, it's these cartoon numbers. So the CapEx spending is there. And you got to skate to where the puck is going. In any event, let me read some of the comments. Mike says, I agree. Remember when a big corporation would have hundreds of file clerks? Then computers, change is coming. 66 as many jobs will be history in a few short years. Yeah, I would say so, for sure. Now, the only thing that is concerning me a little bit short term about the general market, right, is if you, and the consumer, is if you look at Walmart and Costco. I usually use Walmart and Costco as a proxy of the health of the overall consumer. And right now we're wavering a little bit on Walmart in terms of its overall stock price. And same thing with Costco. And what we're seeing, I'm not sure if anybody watched that interview with the McDonald's CEO, but he was on CNBC and essentially said, look, our customers of, lower income are not doing well, and they're visiting the store a lot less. But you're starting to see, high value customers, people making 100,000 plus, continue to come and spend even more money. So we're shifting into an environment where a lot of these companies are going to start just catering to people with more and more money. It's we could talk for like 10 hours on this, but I got to get back home. Hey, Jamie Pope is here. What's up, Jamie? Thank you so much for your kindness. This is Tom. My Claude has replaced one assistant and my workforce. My workflows are 10x increase. Exciting times. Yeah, things are really crazy. Jamie, to your point, again, I don't want to come off as I'm sounding too optimistic, but that's one of my flaws. I tend to just oversell the shit out of everything, just because I can't sit still. This, what we have in front of us is so crazy. If you are under the age of 30, and if you're not spending every waking moment just experimenting with Perplexity AI, experimenting with ChatGPT, with Grok, all these different LLMs, I don't know what I don't know what to tell you. It's mind-blowing the tools we have at our disposal. If you're unemployed right now, I would go sit in the New York Public Library and sit on ChatGPT, Grok, Perplexity AI all day and just chat to it. Start idea generation, right? Maybe you build your own app, maybe you build your own software. I don't know, just start utilizing it, because it is nuts the amount of productivity that these things are churning out. It's just crazy. Anyway, Jamie, thank you very, very much for your very kind donation. Look at this beautiful shot we have of the One Vanderbilt building. Stephen Malloy is here. Says, hey Thomas, we had a great time in New York City last week. Oh, Milloy, apologize for that. You have almost the same last name as me. I'm glad you had a good time in the city. Hey, Carolina Tom. This is the dawn of a true golden age, Tom. Be on your A game. Good to see you, Carolina Tom. JM2 says, this is the reason why there is a big push for the younger generation to go towards blue-collar work. White-collar jobs are machine-controlled now, says JM2. Jimmy Boy says, will the post office survive? I saw, speaking of the post office, I saw a post on X the other day. It wasn't the other day, this was like a month ago. And it was this guy, maybe it was 2 months ago, but it was this guy, he's like, he snaps a screenshot. And the screenshot was from his postman. And, or his packet, or his letter carrier. He said, this is a screenshot from my letter carrier. And the letter carrier's like, oh my gosh, the economy's tanking. I haven't seen, he's like, I almost have no deliveries. Our routes at the USPS are so dry. This is even lower than some of the routes that I had during the 2008 financial crisis. And this guy said, yep, I have the insight because looking at my letter carrier saying that nobody's sending letters anymore. So that means the economy must be doing poorly. And I'm like, do these people not even like pay attention to anything? Do they just like get up and just walk around and just not retain any information? They just don't pay attention at all? Like, what a thesis. And I'm not trying to be mean, but think about that thesis for a minute. The volume of letters being sent is lower than 2008. Therefore, the correlation there is the economy is doing poorly. So in the age of ChatGPT, artificial intelligence, machine learning, big data, social media, people aren't sending handwritten letters to each other anymore. So that means the economy is bad. No, it means people don't send letters anymore. I don't even remember the last time I wrote a letter. Like, I don't even remember the last time I've been inside a post office. Actually, I do. The last time I was inside a post office is when I had to get my passport. I don't send things in the post office. Who sends each other letters anymore? It's ridiculous. I have this house in Miami, and the only time I check my mailbox is when it gets so overflowed, my neighbor sends me a picture and says, dude, your mailbox is literally bursting at the seams. Can you come and check it? Because I guess that's, like a proxy for somebody could target your house to rob things, because that's a sign that nobody's home. But my tenants never check the mail. Anyway, I go check the mail, I reach inside the mailbox, I pull out a wad of junk, I look at none of it, and I throw it out. And I do that maybe twice a year. And that's my interaction with the post office, is going into my mailbox once every 6 months, not looking at any of the mail, and automatically dumping it into the trash because my neighbor forced me to do it. Anyway, I just thought that was a little funny. I'm being a little bit of an asshole, but it was just a funny kind of thing. But again, I'm just kind of browsing over the comments here. I agree, and I share some of the same sentiment with many of you, that the transition period is not going to be all sunshine and rainbows. But it's never been, right? It's never been. If you look throughout history, there's always been job displacement, and there's always been geographic displacement. And you really saw that with the build out of the internet, specifically Silicon Valley, right? So the United States, and we won't go into the exact history because I would be talking here for like 2 hours, but the United States made a major transition, okay? And this really started when we went off the gold standard, but the United States of America made its transition from a primary manufacturing-based economy to a services-based economy, which absolutely devastated people in the Midwest. States like Virginia, West Virginia, but it absolutely created an unbelievable amount of wealth concentrated on the coasts, particularly Silicon Valley and in New York, right? And again, it's not all good, right? Because we've destroyed manufacturing jobs in America in exchange for the most lucrative, powerful inventions known to man, which is the build out of the internet, all of the big tech companies, all of the major innovations that this world has seen has come out of the United States of America, predominantly in the state of California, right? I think we could all agree on that. Well, whether leave politics aside, right? I believe AI is going to exacerbate that. This administration and prior administrations too, the Biden administration did as good of a job as they could trying to bring a lot of that manufacturing base back. If I could give the administration one piece of advice, it would be very, very careful what you wish for, and be very, very targeted with the specific type of manufacturing you're talking about, right? We saw under the Biden administration the CHIPS and Science Act, as they've tried to bring back very, very highly coveted semiconductor manufacturing jobs to the US. I think that's a great thing, okay? This administration is trying to double down on that. But what you don't want to bring back, right, are more of like the lower level manufacturing jobs, just because it doesn't tie in with our economy. It doesn't work, right? We've decided as a country, right around the 70s, to get off a predominantly hard manufacturing based economy and switch to a services economy, which has powered one of the most unbelievable stock markets the world has ever seen, and has powered one of the most, not one of the most, the most powerful economy the world has ever seen. So the political sentiment in this country, and I understand that, is to bring back, manufacturing jobs to the United States, because middle America has been left out over the years, and I get it. But you got to be very careful what you wish for, because I hate to say it, but you don't want those textile factories coming back to the US. You don't. What you do want is, maybe some semiconductor manufacturing plants, right? Maybe as a national security type deal. Very, very specialized, high profile, high grade, high class, high skilled type of manufacturing. And with that change, it's going to leave a lot of people behind. So perhaps as a country, we could have conversations about some sort of a transitionary social safety net for people. But again, we don't know how many jobs artificial intelligence is going to create, just because it doesn't exist yet. So we'll see what happens. The ex-portfolio says, in that case, wouldn't it no longer make sense to invest in a company at all? Did you not listen to the never mind. Sharon, cheers. Joseph Hardaway, good to see you. DC322 says Salesforce laying off 4,400 people because the CEO believes AI will do the job. Well, Benioff, Salesforce just reported earnings. Mark Benioff is the CEO of Salesforce. They're growing at high single-digit revenue growth, and I agree. How many employees does Salesforce have? Over 10,000. Maybe even over 20,000. Totally. Tech companies, specifically software companies, longer term, I think software companies like SaaS companies could possibly be a risk for AI, but we're thinking like 10, 20 years plus on that. But short term, what you're going to see is probably gross margins across the board at a lot of these tech companies continue to explode as you have layoffs continue to explode, right? But in a historical context, the layoffs that we're seeing now aren't really anything out of the norm. It's just a lot of these companies aren't hiring as much as they would in another economic boom, because artificial intelligence is increasing that productivity. Dutchman says TSMC is investing billions here in Phoenix for a chip manufacturing plant. Brandon says this is a great video on Smarter every day about the state of skilled manufacturing in the United States. And it was concerning from a national security perspective. I'm going to check that out. Thank you, Brandon. Daryl, good to see you. Roz999 says, come on, Tom, I am over 40 and have been experimenting with these AIs. They are great for writing Python scripts. Yeah, I mean, to your point, I'll expand that to everybody. Everybody should be experimenting with AI. It's just the amount of time and energy it saves me every day is unbelievable, particularly for, market research, learning new skills. If you've ever wanted to learn how to program and how to code, I mean, now is the best time. You've seen a lot of people say that they wouldn't learn to code because they believe that AI is going to do all of it. I actually disagree with that. That is the one thing that I disagree with. I think you should be doubling down on computer science and engineering, because AI is going to make you so much better of an engineer, right? You don't even have to have all of these fancy degrees. I mean, let's say if you went to college and you didn't study computer science and you feel like you're left behind. Well, now with AI, you're not left behind, because you could literally come to the New York Public Library, sit inside the Stephen Schwarzman building, and have ChatGPT, Perplexity AI, Grok, Gemini teach you the ins and outs of software engineering. It's never been easy to learn. You have your own personal teacher, you have your own personal assistant that could experiment with things, right? If you want to write the prompt yourself, you could even have AI check your code, check your work. How could I improve this? How could I make this code more efficient? How could I make my code faster, right? If you're interested in quant, maybe you start to program your own trading bots and your own trading algorithms and A/B test them, and have ChatGPT or Perplexity help you out with that. I mean, there's an endless amount of things that you could do with these technologies. So it may seem scary, right? But I think you should embrace it and just dive right into it. I want to give you this amazing shot of the New York Public Library here. Mr. Steve in Ohio says Intel is building a chip factory here in Ohio. Well, another thing, see, we haven't been live in such a long time that we've just missed so many things that we need to talk about, which I can't really talk about right now because I got to go home. But the US government just took a 10% equity stake in Intel. Whether you think that's right or wrong or not, I'm going to come out on a limb here. I don't agree with it, but I don't have time to explain my position about it right now. I wish I could. Maybe I'll come here live tomorrow, but how can I explain this? My general point is, I do not think it's a good idea for our government to be taking equity stake in companies for very specific reasons. Sovereign wealth funds, generally speaking, actually don't work in other countries. Very, very, very few countries. Like Norway, it works great, and we could talk about reasons why. Singapore is also another one that maybe you would want to replicate. So over the weekend, if you want to do a little bit of research on these two sovereign wealth funds, number one Norway, number one Singapore, study how those countries have really study how those countries go about their investment process. But predominantly speaking, over the world, it doesn't work, right? The Saudis have made very, very poor investments. Generally speaking, the reason why I don't think it's a good idea is because you constantly have administrations changing. And the most important thing about making an investment is the stewardship in that investment. And if you constantly have administrations changing and changing and changing, you have to see a deal through, right? I believe that since you have so many investment bankers or ex-investment bankers in this administration, aka Howard Lutnick, right? Ex-CEO of Cantor Fitzgerald, you have so many Wall Streeters and deal makers in this administration. They're trying to run the country like an investment bank and do, takeover bids and all this stuff, which is great, but you're going to be out of here in 10 years, right? So all of that could unravel and be horrible. That's just me. But we could also have another 2-hour conversation on why Intel has become such a piss poor company. They haven't been innovating the way they should. They've been misallocating capital in a major way. But there's so much more I want to talk about. But I must go, everybody. I must head home. But that's the big picture. Watch the Federal Reserve. Watch interest rates. Watch gold. You know, we're at 3,700 in gold right now. That is telling us that this monetary environment is going to shift to being hyper accommodative. And any seasonal pullback in the market, any correction in the market, watch for these companies that we were talking about, like Microsoft, like Alphabet, Amazon, Apple, to rebuild their bases. And I think we'll have some unbelievable opportunities here. So I'll see you guys tonight at 8:30 when we'll upload our regular video. And hopefully I'll have some more time to do these live streams, perhaps 3 days a week. So Hawaii, thank you so much. T-Mac, thank you so much for joining us. Tatted T, D Del 477, Scott Solomon, thank you so much. Most importantly, everyone, enjoy the weekend, because we only have a few more of these weekends left before it starts to be freezing cold. So enjoy it, have a safe weekend, and we'll see you guys on the other side. Alfred, thank you very much. DC322. Take care, everybody.